Welcome to Cambridge House Live. I'm Bridgitte Anderson at the Canadian Investor Conference, Vancouver. And here with me is James West, who's the publisher and editor of the Midas Letter. Nice to see you.
Thanks, Bridgitte.
You recently returned to some mining investments after focusing elsewhere for a while. What's bringing you back?
Well, essentially the same thing is bringing me back. That's bringing back the devotees to the idea of the value of commodities. So, the prices have been beat up. The prices of certain commodities do not reflect their value presently. That is the case, I believe, in precious metals, certainly in the case of copper, zinc. But we're in an even more interesting phase of the market right now because it's been such negative performance for the last 3 years.
Yes. That
in spite of the fact that commodity prices are recovering, supplies are diminishing, the prices are still very much beat up. So it's a buyer's market.
So what are you looking for specifically then in a mining investment?
Well, I'm looking for a deposit and a management team that can take that deposit into production regardless of what the price of that company's shares are. So it's got to be a company that's not burning 30% of its available budget in G&A, a company that knows how to tighten up and operate more smartly, but yet can still raise money without diluting everybody out of the deal.
Well, and how much of that financing is still a big challenge then?
Well, the game has changed a bit because it's been so negative, because there's been so much value destruction, is that the institutional, the high net worth, and especially the retail investor is 10 times more sensitive to what qualifies as an investment grade opportunity. So if you look around the marketplace, there are companies whose, you look at their charts, it's like, well, there hasn't really been that much of a downturn, and that's because they've got the deposit, they've got the management team, and they operate with a discipline that gives investors comfort and doesn't make them think that they've got to get out of something that's falling apart. And so while 2/3 of the industry falls off of the board, the 1/3, actually it's more like 1/10 that is left, are the highest quality management teams with the highest quality of deposits that are the most likely to become tomorrow's producers.
Now, over the last 2 to 3 years, there has been a lot of discussion about how much consolidation we've seen in the junior mining sector. Do you think that have we done all of the consolidation that we're going to see mostly, and are we moving past that now?
Well, consolidation is a continuous state. Certainly when asset prices are down relative to their highs, it encourages a spate of consolidation. But as it does when asset prices are at their highest, because the bigger companies start to see different companies as must-haves, regardless of the high price they've had to pay. And we've certainly seen a lot of these companies embrace acquisitions that have almost swallowed them. In the case of some companies like, for example, Teck acquired a coal company that almost buried it. But there's a flurry of activity and acquisitions, both when prices are high, when prices are low. It tends to slow down, and everybody rolls up their sleeves and builds companies when prices are more or less uniform.
You are shying away from at least one of the gold majors, from Barrick. So tell me what your hesitancy is there.
Well, my criticism or my hesitancy about being an investor in Barrick stems more from the fact of the life cycle of a major mining company. So Barrick, being the largest producer of gold in the world, has to produce 7 million plus ounces of gold per year, or up until their last financials, and they've got to replace those ounces every year through the acquisition of more companies. How do they replace those companies, those ounces? Through acquisition by issuing equity. So you end up in this situation where, in a bear market for gold, the cost of capital on a weighted average cost of capital basis goes way up for Barrick, and so it starts to become a case where A, they can't afford to put deposits into production that they acquired assuming a $1,350 gold price. B, the value of their equity, their primary mode for acquisition, is not as valuable as it was, and so the entire outlook for in the long term becomes less attractive, even in a bull market, for a company like Barrick, because at least with a small company that's single deposit or maybe 2 deposit development focus, it's very clear what you're going to get. It's going to go from nothing to production, or it's going to go from nothing to a sale to a company like Barrick, but it's a very clear investment proposition. I believe that the life cycle of the major mining company ultimately has the seeds of its own destruction sewn in on a guaranteed basis, just because of the way they have to grow and maintain size.
Okay, well, we're going to leave that alone because I want to move on to technology, because much of this conference is dealing with technology. How would you say how would you characterize the health of the tech sector in Canada?
Well, Canadian technology has always been a major contributor to basically any subsector. So, you look at companies like, the company that developed the Canadarm on the space shuttle. You look at, in microchips, in software, in switching. I mean, some of the great names in technology are household words the world over: BlackBerry, Nortel, etc. So the health of it, I think, is as vibrant as ever. I mean, the caliber of education from which technological ideas originate in Canada is among the highest in the world.
Well, some are saying that Vancouver is being seen as the tech startup capital of Canada. Would you agree with that?
I would agree with that, actually, because, much like California, the technologically minded seek a recreational lifestyle that when they're not holed up somewhere making code or writing code till all hours of the night, they're looking for a quality environment to spend their free time in. And so it sort of goes hand in hand, a beautiful natural environment with a technologically minded population.
Which is a perfect segue to marijuana. The recreational lifestyle and British Columbia, there has been a focus more on this as a burgeoning industry. What do you think the potential is, though?
I think the potential is for vast wealth destruction. And the reason I say that is because we've got three categories of marijuana in our current sort of popular discourse. Medical marijuana. So medical marijuana is legal across the country in Canada based on the fact that there are 38,000 registered users of medical marijuana who have been licensed to use it and acquire it from sources where typically they don't pay more than $1 per gram. So now we've created this medical marijuana commercial layer,
right.
And the federal government has tried to legislate this 38,000 member core group into buying their medical marijuana from these commercial growers who are predicting in their business plans an average sale price of $8 per gram, so an 800-fold increase over the daily cost of what is essentially their medicine. Now, the Canadian government has guaranteed constitutionally access to medical marijuana to these people and have basically blessed it with the mantle of credibility as a medical solution.
That is medical. So for the rest of the country, it doesn't look likely that this government, the Harper government, is going to move to decriminalize or to legalize marijuana anytime soon. So without that kind of policy in place, can the industry continue to grow in a legal kind of way for investors?
Well, I think what has happened and what politicians, especially the Harper government, fails to recognize is that by legalizing medical marijuana, they have let the genie out of the bottle. And so it's no longer going to be acceptable to criminalize a recreational user of marijuana while a medical user is entitled to go about it. So what the risk that the Harper government runs, and which they're going to come very hard face to face with, is that if they don't move to recreationalize marijuana for all Canadians, they're going to find themselves out of the government.
And one of the things that the government has always said is that they're waiting to see what the U.S. is doing. Well, we've got now 2 states where it is legal, and in fact a third might come on fairly soon as well. It's making moves to do that in the next round of elections. So will that factor in, do you think, or is it maybe a decision that won't happen with this government? It seems that Prime Minister Harper is really opposed to the idea.
Well, that's true. And in the United States, I mean, it's legal on the state level, but it's illegal on the federal level. Yet the feds have said they're not going to prosecute. Yet the DEA has been disrupting medical marijuana facilities. So it's essentially a giant mess. And the same thing is emerging here. So it's fine while Canada says they're going to observe what's happening in the U.S. and base their policy on that experience. What they fail to recognize is that the informal marijuana industry has been alive and well and a major part of Canada's GDP for decades.
True enough. And we will leave it there. Thanks so much, James. I appreciate your time.
My pleasure, Bridgitte. Thank you.